Hi, Dan Paladin bringing you this week's edition of the Mortgage Morsel. This week I just want to touch on some economic data, being that we had a very robust jobs report today. Knocked it out of the park, so to speak, with adding 271,000 jobs, a small revision to the previous month, and an uptick in the hourly wage growth. So some positive data there. So that has had a negative response to the bond market, which has cracked 2.3. So rates are, of course, being hit pretty heavily today. And as far as conforming rates, you might be seeing the end of sub 4%, conventionally speaking. This probably is going to be the trend from this point on out, and opens the door for Yellen to most likely raise the Fed rate by 0.25% come December. Not written in stone, but that seems to be the consensus, that with this positive data and barring any negative data next month, will probably lead her to raise it on December 16th. So what does that mean? It means rates are going to be increasing. That's going to be the trend. So if you have any borrowers that are been on the fence, you might want to explain the difference between a 0.25% increase in rate and what that does to their purchasing power. I have all the tools to run analysis like that, so if you have anybody that needs some added info in that regard, feel free to reach out to me. So that's it with this edition of the Mortgage Morsel. Some economic news overall is good, but of course has a negative effect on rates. So make it a great weekend, and if you're working, I'm working, and I'll see you next time on the Mortgage Morsel.